In the past few months, we have seen the stock market almost completely reverse. Many of the gains made in much of 2020 and into the first few months of 2021 have been completely trimmed off the top. This initial surge was in large part due to quantitative easing and lowering interest rates cast by Jerome Powell as chair of the Federal Reserve. Now, most notably, we have seen growth stocks and tech stocks, which surged to record highs, enter a massive period of consolidation in the past few months. There is seemingly no end in sight, or is there? Welcome to the show, guys. My name is Nick. Thanks for tuning in if you're new, and thanks for coming back if you're not. In today's episode, we're going to be looking at the broader stock market and how this is specifically going to be affecting our favorite EV plays in the coming months. We're also going to be doing a deep dive on NIO stock specifically, what's currently happening to its valuations, and then finally touching on some news emerging pertaining to the global semiconductor shortage. We have a ton to get to in today's episode, but before we get it, Webull is giving out 2 free stocks worth up to $1,850 for free. You could trade before and after hours markets. They are 0% commission. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. This offer ends soon, guys. You do not want to sleep on it. Check out our Discord page. It's completely free. The link is in the description. The chat is always popping off. I absolutely love it. There is a paid version in our Patreon page where there's under the radar stocks, more content behind the scenes. So if that interests you, the link is also in the description. All right, ladies and gents, let's get right into it. All right, so before getting into NIO's valuations specifically, it's important to have a good grasp on what's happening in the broader stock market to get a sense of what's going on. The broad stock market has massive implications for growth stocks and tech stocks such as NIO. At the core of growth valuations lies macroeconomics, federal policy, economic recovery, and inflation. These factors are greatly affecting growth stocks such as NIO's valuations currently. Now, there's been virtually no bigger mover of share valuations as of late than the actions of the Federal Reserve. Stocks have essentially lived and died by the mouth of Jerome Powell as he forecasts the future strength of the stock market. In the past year, many industries were extremely hard hit. However, many industries actually surged. We saw discretionary spending fall to new lows during lockdowns, and saving rates actually boomed. This has economists predicting that as a vaccine rollout continues, businesses begin reopening, spending is going to enter somewhat of a golden period. Powell states that household spending on goods has noticeably increased this year, which may signify strength in the overall economy. On top of this is federal stimulus packages. This could catalyze short-term inflation rates higher up to about 2.4% before then dropping back down slightly. Now, this has many investors extremely skeptical, especially those keeping a very close eye on the 10-year Treasury bond yield. This has been rising back up in the past few days, now reaching 1.685%. However, this would still be extremely low, relatively speaking. This has many investors absolutely running for the doors from their speculative plays and growth stocks and back into the tried and true blue chip and recovery stocks. Now, we have seen EV valuations take major hits in the past few months, and this is for a number of reasons of which we'll get into. Stocks like Tesla, NIO, Xpeng, and Li Auto felt massive surges the past year, and there is now a ton of hesitancy about further growth moving throughout 2021. These are now objectively expensive stocks. We see Tesla losing about 30% valuation and NIO losing over 40%. So if you were like me and woke up this morning to news of a global semiconductor shortage and just wanted to shut off your phone and not even look at NIO valuations, you are not alone. We saw NIO absolutely plummet in pre-market trading. It then stabilized around $36 per share and then fell all the way to its building support of $34 to then slightly recover, closing out the trading day. We are now sitting at $36.13, down 4.77% on the day, down $1.81. Now, if you've watched my channel before, you will be no stranger to the looming threat of a global chip shortage. This is not a new concern. However, it's a concern that is now here. Now, why does this matter actually, and what has happened, and where can companies move going from here? Well, during 2020, when the global health situation was gaining momentum, automakers actually vastly underestimated the future demand for vehicles. This makes sense with lockdowns and people getting stuck inside and the decentralization of workplaces. People seemingly needed less of a reason to actually own a vehicle and drive anywhere. It seemed as though vehicle demand would likely be diminished for the foreseeable future. However, what shocked so many companies was the relative boom in auto sales even during lockdowns. Now, as I touched on before, saving rates actually escalated, and the economy, in many regards, aided by stimulus, was less scathed than originally anticipated. This put automakers into a short supply of materials, including semiconductor chips. To fulfill orders, companies then had to go into the red, taking from future supply in a, well, we need to fulfill these orders now, we'll deal with the consequences of a dwindling chip supply later. Here we are, now dealing with the consequences of that fateful decision. NIO had forecasted a few weeks ago that they were fairly certain that they could deliver up to around 7,500 units per month in the spring and summer months. Beyond there, they weren't forecasting, however, they were fairly certain throughout the spring and summer months. Now, this output of 7,500 units has less to do with demand and a lot more to do with supply. This output was capped due to double shift mode implemented at their JAC Motors facility, essentially building and delivering vehicles as fast as they physically could. And, of course, the chip supply. Now, released yesterday morning, NIO announced a temporary suspension of production for 5 working days. The global supply constraint of semiconductors has impacted the company's production volume for this month. They are now lowering their previously released outlook of 20,000 to 20,500 vehicles, down about 1,000 vehicles to 19,500 for Q1 2020. We have seen other big-name automakers also greatly impacted by this chip shortage. This is not NIO specific. However, it is indeed impacting EV companies harder as they require more chips. It makes sense. They have batteries and batteries require chips. Now, this is a big blow to their business ops and their shareholders. There's no doubt about it. People reacted to it quite vigorously, selling off substantially. However, let's dive into this a bit deeper. We have seen chip shortages before, and as I previously stated, this is a cross-sector problem. It's not NIO specific in any regard. We have seen Tesla previously shut down their Model 3 production for about 2 weeks, and we have also seen Volkswagen drastically lower their output forecast. Now, these are some of NIO's main competitors who are also going through this extremely difficult period, and that's an important point here. It's affecting everyone somewhat equally, and that's part of the reason I'm not overly concerned about this chip shortage. Now, there are some reports coming out of China that the chip supply there could be somewhat mitigated in the coming months as the supply catches back up to the demand. However, that being said, we will have to keep an exceptionally close eye on this as it develops. Li Bin, NIO's CEO and founder, actually warned investors about this potential issue, stating that, quote, "We should have the chip supply to meet of basic demand, but the risk is still quite high." This is something I touched on a few weeks ago, and it has now unfortunately come to fruition. Now, I do want to make it quite clear that I do not think this is something to just brush aside and say, oh well, NIO will recover. I do think this requires some immediate attention. We could see NIO revise their Q2 expectations. We could see that 7,500 unit drop down to 6,500 units for the spring and summer months. I will be keeping a very, very close eye on this. Make sure you subscribe. You do not want to miss any of these updates. Now, as always, I am still bullish on NIO long term. I do think moving into Q4 2021 and Q1 2022 is when they are really going to shine. They will have their 2 operations open by then with a hopeful output capacity per annum of 600,000 units. They will also have their ET7 out by then, equipped with a 1,000 kilometer NEDC range battery with 150 kilowatt hours. This will be fantastic for the company. It is an exciting time. However, we do have some tribulations, some potential undulations, and volatility coming within the next few months. I will be keeping a very close eye on this chip shortage. I do hope it is mitigated. However, we will have to keep a very close eye on it. Anyways, everyone, thank you so much for watching. Make sure you subscribe, smash that like button. Don't forget about the Webull promo, 2 free stocks worth up to $1,850 for free. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in the description. You can trade before and after hours markets. Check out our Patreon page. We have more content behind the scenes under the radar stocks. This also gains you access into our private Discord channel. Anyways, I will see you all in the next video. Take care. Happy trading. Cheers.